Good morning, welcome to the ADS Securities Markets Update. We'll start today again with a look at the latest developments from the US on Friday before looking at the upcoming sessions. But another day with more bad news for the US has caused a rate hike speculations to fade every day, with more and more evidences that the economy which basically points to a faster economic slowing down in the US. And this is, of course, contrary to the market estimates or the market expectations. But first of all, on Friday, the year-over-year PPI in the US basically declined by almost or toward 1%, and this is the lowest level since May of 2013 at 1%, and also this occurred despite the fact that the estimates points to a rise by 1.6% or to remain at 1.6%. Moreover, the rate of change between January and February from 1.6 to 1% is the biggest decline on a record. Secondly, the month-over-month also PPI, finally less food and energy, or the core PPI, basically collapsed by 0.45 or almost 0.5%. This is despite the fact also that the estimates pointed to a rise of at least of 0.7%, and this is the biggest monthly decline on a record and the second monthly decline in a row, which basically we have not seen such a decline since 2012. The third point, the month-over-month PPI final demand unexpectedly fell by 0.5% in February, comparing to a record decline in January, basically when it declined by 0.8% back in January, while it had been anticipated also to rise by at least of 0.3%, and this is the fourth monthly decline in a row not seen also on a record. Fourth, the year-over-year PPI, the final demand also collapsed for the first time on a record, declining by 0.6%, basically for the month of February, and it was, however, expected to remain unchanged at 0.0%. Fifth, the University of Michigan Consumer Confidence Index also came in contrary to the market estimates, declining sharply toward 92.1 in March, down from 95.4 in February, despite the fact that it had been anticipated to rise to 95.5, and this is the second monthly decline in a row, and basically we have not seen such a decline for 2 months in a row since 2013, and this is also the lowest reading since November of last year. The Canadian jobs report also came in with mixed outcomes on Friday. Some figures came in also in less than expected, and some of these figures also came in worse than expected. The Canadian economy lost around 1,000 jobs in February, while the estimates pointed to a loss of around 5,000 jobs. However, the economy also added more than 35.4 thousand new jobs in January, comparing to a loss of 1,000 in February. However, the unemployment rate also increased by 0.2%, rising towards 6.8, up from 6.6, while it had been anticipated also to rise slightly towards 6.8% only, and the participation rate increased slightly towards 65.7, up from 65.8. The good news is that the economy added more than 34,000 in new full-time jobs, while the part-time jobs also fell by 34.9 thousand jobs. The US dollar also kept on rising after the disappointment, or despite the fact that, or despite the US disappointing figure, the the euro tumbled below 105.30. Cable or sterling dollar also have fallen toward below 157.30. The Aussie and the Kiwi remains at their session highs, and however the dollar Swiss trading above the parity, and finally the dollar yen remains well above 121.50 and looking for a breakout maybe in the next few hours. But finally the dollar CAD spiked above 1.28, which is a 7-year high and likely to continue within the next few days amid the continuous decline in oil prices. As for West Texas crude, or for crude oil, the West Texas crude lost more than 2% between Friday and today, reaching as low as 43.50, which is the lowest level in almost 7 years. And Brent crude also lost around more than 1.5%, trading around 54.18 this morning. And with the decline, or with the close of last week, a new bearish pattern has already developed, showing or suggesting a more decline in the next few days. As for today, and there are a few economic releases across the day, but first of all, in Europe, we'll be focusing on Switzerland, the Swiss PPI and the retail sales. The Swiss PPI is expected to rise by 0.4% after a decline of 0.6%, but at the same time the Swiss retail sales is expected to rise by 2.6% in February, comparing to a rise of 2.2% for the month of January. As for the US session today, another day with a collection of economic figures will be released from the US, including the Empire State Manufacturing Index, in addition to the capacity utilization rate, industrial production, and the NAHB housing market index. Most of these figures are expected to be higher than the month before, from February to January. However, a disappointment is also, could be happen amid the latest disappointment for the month of February. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic related reports and analysis. Thank you for watching.